Hello, folks. Good to see you again. Glad to be here. Hope I can help you. Mike Newmeyer, Game Plan for Retirement. All the information, of course, is on the site. We have a website also called Game Plan for Retirement. You can check it out. And then some of our podcasts, or all of our podcasts, are there if you want to review them. I've been working on the seminar, talking from the seminar quite a bit, and I'm going to continue with that today. I'm going to talk about income primarily, but we're going to touch on other things that are, that are occurring now. Inflation, of course. I've made a list of the top issues that I think we should talk about today. Inflation is a huge issue, huge issue. Do you know who inflation helps and who it hurts? Well, the interesting thing is the first thing that is noticed, of course, is the interest rate, because you're paying more for everything, and that goes back to the cost of oil, gasoline. Of course, has been increasing. You know all about that, okay? But interest is a huge bottom line cost. Why is that? Because everything has to be financed. Everything has to be financed. When you see the government spending money, we're paying interest on that money. We're printing money, and then we're paying interest because we're issuing bonds. We're selling bonds to support that money that we're spending, and we have to pay interest on the bonds. And that goes on and on, okay? So then we're paying interest on interest. It goes on, it gets worse. But who does interest increase? Who does that help? Interesting. It helps the top 10% of the wealthy folks in the United States. The wealthier you are, the more interest helps you, because all your assets are increasing in value, and you're getting more money at the bank, so to speak, because you're quadrupled the amount of money you can get at the bank, more than quadrupled the money. If you can get 5% today and you can only get a fraction of 1% earlier, old money doesn't lose money. So they use the most conservative approaches. They do very well when interest rates go up, huh? Absolutely. And who gets hurt? The people that have credit cards, the middle class, and of course the poor. But we are talking primarily to the middle class. You folks out there are watching, have careers, you're working, you're contributing to 401ks, all those kinds of things. And so what are you going to do with the credit cards? You maxed them out already? What we're seeing in the United States is we're in a recession. It hasn't hurt too much so far, except for the interest and the inflation, okay? But now we're nearing the end of the credit card money. We're nearing the end of the giveaway money. All of the supports that we got during COVID are pretty much gone. So now we're going to see a deep recession. And I dare say there's some folks in our business that are talking about the D word, which I pray that is not the case. But we can have a very deep recession, and it could last a long time. Now, some people are very optimistic. Oh, no, it won't happen. Well, we saw it happen in 08, 07 and 08, didn't we? When the banks collapsed. Oh, yeah, we have a little bank collapse activity taking place now. That I'm not too worried about. I know the Treasury will undoubtedly try to make it easier. They'll for political reasons and lots of other reasons. You see what they're already talking about. They're talking about bailing out all depositors. So people that aren't insured beyond $250,000, they're talking about bailing them out too. Where's that money going to come from? That money is going to come from money we're going to print, the same thing, and more inflation and so forth and so on. So it's not going to get better if they bail the banks out. If they bail the banks out, they're going to use our money to bail them out. So we are going to have to pay the interest on all that money that we're going to borrow in order to do it. So that's not necessarily good news that they're bailing the banks out. Okay. Now, of course, the alternative could be worse. And will they be able to bail out all the banks if we had a real banking crisis? That's a big question. We didn't bail out all the banks during the worst of 8 and 9. 2008 and 9. So we'll see. What about your savings? Are your savings safe? Yeah, FDIC will stand behind that 250 number anyway. So in that sense, they're safe. You don't want to be affiliated with a bank that's in trouble. You don't want to see that happen. But at the same time, your money is insured up to $250,000. And most folks, most of you that I'm talking to, don't have more than $250,000 in the bank. Okay. So that's probably the case there. But you have money in 401ks, don't you? If you haven't retired, you got money in 401ks. What's happening with that? With the market that we're in, what's happening with that? Okay, first thing I tell you is get that money in the safest position it can be. Of course, that isn't going to make things better for the economy, huh? If we don't put money into the market, into the real market and the mutual funds and stocks, of course, that isn't going to do a lot of good for the economy. But we have to protect ourselves. The old saying that I've always gone by is, we are our own bank. You are your own bank. You have to take care of you. You have to take care of you first, just like we have to take care of our country first. So you have to take care of yourself first, your family, and so forth and so on. You've got to protect your job if you can. You got to protect your money if you can, or as much as you possibly can, and make it last as long as it can. We've talked about how to save money. We've already gone through all of that. You know, where you can save money, how to save money, and so forth and so on. How old are you? If you're thinking about retirement, and let me tell you this, I don't care how old you are, you got to be thinking about retirement. A lot of people say, oh, I don't worry about that. I don't worry about that. And things get more difficult because they haven't saved. Are you saving? Are you saving? How long could you last on your savings and on your assets? God knows you don't want to give up your assets. You don't want to sell your house. You want to stay in your home. You want to maintain. What if you lost your job? God forbid. A lot of layoffs taking place. You read it, you hear it and read it every day in the news and on the news shows every day. The biggest companies are laying people off. Biggest companies are laying people off. And what does that mean? It means the underlying smaller companies that support the big companies, that provide them, you know, with parts and technology and all that sort of thing, they're going to be hurt. And that means their employees and their families and so forth. I don't want to scare everybody, but these are things we have to face, and we have to do the best we can to prepare for the future. So, how old are you? When do you think you're going to retire? Have you done any preparation? What is preparation? Well, you participate in the plans at work. Sure you do. And then watch them carefully. I tell government employees, you know, that have TSBs, look at that G fund where you can protect your money and not lose your money. Look at that. If you're in a 401k, look at Stable Value or other accounts like Stable Value, choices like Stable Value, where you can protect your money. You can't afford to lose your money no matter what goes on in the industry, no matter what goes on in the economy, no matter what goes on in the market. Okay. When we retire, are you preparing? Back to what we talked about before. If you're preparing for retirement, you're also preparing for bad times, tough times, difficult times. You know, if you lose your job and you've been preparing with 401ks and so forth and so on, you know you can draw some of that money down. If you're not 59 and a half, you know, of course you're going to pay penalties, but that money is there. If you had to get it, it's there. If you're not contributing, it won't be there. So you got to max out your 401ks as much as you can, or your IRAs, as much as you can. The choice there in an IRA is do the Roth if you can. If you can do the Roth, because that goes in, you know, after taxes, comes out tax-free. Now, it's true, you got to be 59 and a half for it to come out tax-free. That's also true. But you got to make the best of those situations. Talk to your tax person. If you don't have one, get one. Get a tax person. Go on Google, read the tax codes. You can do that. Go on irs.gov, read the tax codes. Learn as much as you can how to preserve your money with regards to taxes, how you can do the best you can with taxes. You know, we're not supposed to pay more taxes than legally required to. You know, we don't have to do that. We shouldn't do that. You need to preserve as much of your money as possible. Pay as little taxes as possible. Okay. How do you get started? Here's what you want to think about is income and expenses all the time, and certainly in retirement. If you're going to retire, you see retirement out there, you know, in 5 years or next year or whenever it is, start thinking about what your expenses are going to be. How can you reduce your expenses between now and then? How can you do it? How can you consolidate things and reduce your expenses? Do you know what your expenses are? Make a list of your monthly expenses, what you're spending. Look at your checkbook. You look at your credit card statements. See where the money is going. See where the money is. How much of it is discretionary, which is to say money you didn't have to do, money you didn't have to spend, money bills you didn't have to pay. Look at those. Look at everything you're spending money on and ask yourself, how can you reduce that expense? And we've talked about that many, many times on this show, huh? We've talked about that. And we've answered questions. People call us with questions. We include the answers in our presentation whenever we do these podcasts. Follow our podcasts. They're not just ads about us, huh? Now, we do have some things we want to tell you about what we offer. We right now have a plan, a private pension plan, where you can get a 32% bonus. Now, that's going away. We only have a little bit of time left on that one. If you're interested, give us a call, please. 410-902-0464. 410-902-0464. Mike Newmeyer. Just give me a call. Happy to talk to you about all of that sort of thing. Okay. We also have other plans that are very good. They can be very good for you in retirement, provide solid income for lifetime. I've had people say to me through the years, well, how long does it last? Well, I don't know how long you're going to live. Let me ask you a question. How long are you going to live? Well, I don't know how long I'm going to live. Of course you don't. How long is your spouse going to live? Well, I don't know. Of course you don't. That's why you need lifetime income. You don't really know. We specialize in that kind of product, plan, and program to provide you with lifetime income that will always be there, that will always be there. It's like a private pension. If you have a pension, great, glad to hear it. If you got Social Security coming, glad to hear all that. If you got a 401k that you're going to start to use when you need it, glad to hear all of that. If you got rental property, glad to hear that. What are your sources of income? What are you going to lose as far as income is concerned? What decisions do you need to make in the next 5 years? Are you paying off a college loan for one of your kids? Those kinds of things are all expenses, and how are you going to handle them? We've come up with some pretty novel answers for folks on things like, college paybacks. We've come up with some very novel ideas on how to do it less painfully. We can help you. Give us a call. Come on in. I'm always here. I'd love to talk to you. And that's basically what I want to tell you today. The help is here. We can help you get ready for retirement. We can help you deal with your overall financial problems. We can give you ideas you may not have ever had. And, this is our business. We want to help you. Please give me a call.